I just received a great question from one of my clients, and I wanted to take the opportunity to be able to share it with you. Oftentimes when going through the mortgage experience, the question of what is APR comes up. Now APR stands for the annual percentage rate, and oftentimes when you're getting disclosures from my company, you'll see the fixed rate that we locked in, as well as a number called the APR, which is the annual percentage rate, and I wanted to take the opportunity to explain it to you. First and foremost, the rate that we locked in, whether it's 4 1/8 or 4 1/4 or whatever that is that we locked in, is the rate that you are committed to or that we're committed to for the next 15 years or 30 years of your loan respectively. That's locked in. However, when you're taking a look at the annual percentage rate, there's 3 different components that I wanted to share with you and how they come up with that number. The first one is the interest rate, which we've locked in. The second one takes a look at the closing cost. And this gets a little bit confusing because when you're purchasing a house or when you're refinancing a house, oftentimes there's lender credit or there's seller credit that's actually used in order to pay for some of those closing costs. However, when taking a look at the annual percentage rate or the APR, they take a look at the total amount of closing costs that it's going to take in order to be able to fund this transaction. The third component that you're going to take a look at has to do with mortgage insurance. And for a lot of our clients in working with first-time home buyers, putting 3.5% down on an FHA or 5% on a conventional or 10% is really common. For an FHA loan, as you know, the mortgage insurance is for the life of the loan. However, for conventional loans, having that mortgage insurance, depending upon how much you put down, can be as long as maybe 5 years or 10 or 11 years respectively. However, when taking a look at APR, they're going to take a look at what the total closing cost is for that mortgage insurance and what they envision that total cost will be for the life of the loan with that mortgage insurance. So when looking at this fancy algorithm of how they figure out the APR, it's the interest rate that they have, it's taking a look at the closing cost, it's taking a look at potentially the mortgage insurance, it's gobbling it up in this special algorithm, and then what it's doing is it's amortizing it over 30 years or 15 years respectively for that particular loan. This is some really grateful information or helpful information that I want you to be able to have to be able to make an educated decision. Because at the end of the day, we're trying to help you feel safe and secure so that you can have the freedom to have fun and enjoy life. And being educated to ask these types of questions is super important, and I hope this was helpful for you. As a matter of fact, please feel free to pass this on to all of your friends and family members who might be going through this same process of either buying a house or refinancing a house. And please feel free to share my information with them, and my team and I would be happy to help. Once again, it's Marc Thompson. Thanks for watching, and have a great day.
Mason McDuffie, mortgageanddaves.com.